Thank you all for coming, and especially thank you for showing up early for the pre-conference afternoon, which we are beginning right now. I'm just going to start with a couple minutes to set the stage for what we're doing this afternoon, a little bit of context on why we chose this as the topic for the pre-conference seminar, and then I will hand it off and we can dive right down into what's happening in distributed solar project finance in the U.S. My name is Shayle Kann. I'm the Senior Vice President of Research at Greentech Media, and you'll be hearing more from me tomorrow and Wednesday than today, but I'll pipe in once in a while with random logistical notes throughout the day today. So the reason that we decided to do this topic for the pre-conference seminar is, oftentimes when we run the Solar Summit, the idea behind the Solar Summit is to cover the gamut of the solar industry to the extent that we can over the course of 2 days, which is a pretty heavy mandate. We're talking about everything from manufacturing all the way upstream, polysilicon manufacturing, down to modules, inverters, balance of systems technologies. We're talking about the US solar market. We're talking about the global solar market. We're trying to boil the ocean in a short period of time, and there's always some things that our audience tells us that they want to hear more about, but it warrants a larger conversation than we can have in a single session during the main conference. And project finance, and particularly distributed solar project finance in the US, has been one of these things for a number of years now. So we decided to design an afternoon just to talk about this, allow us a little bit more leisure to get into the nitty-gritty details, talk both about what's happening now and where the market is headed. And we're looking forward to it. We have a fantastic group of speakers who will hopefully illuminate some of the trends that are occurring in the market today. So just a couple of quick notes on where we stand in terms of distributed solar in the US right now to provide a framework for what we're talking about the rest of the day. The distributed solar market, as defined by residential and non-residential, and non-residential could further be split out into commercial, industrial, school, government, nonprofit installations, all kind of lumped together, but sharing a common characteristic in that they are on the customer side of the meter. So today, when we talk about distributed solar, we're talking about customer-sited solar that is, or for which the power is sold to a customer. So we're not defining this by project size. Given that, we've seen 15x growth in overall, and when you incorporate both the residential and commercial markets over the past 5 years, and the next 5 years should be pretty impressive in terms of continued growth. 2017, obviously a big question mark, and I'll note that our forecast for installations in 2017 is in flux and is totally dependent on, one, what happens with the ITC, but two, even assuming the ITC expires as currently planned, where system economics and particularly project finance goes over the next few years. The extent to which the cost of capital can be reduced and broader pools of capital outside of tax equity introduced, then the easier and easier it gets to make the 2017 numbers look pretty good. Either way, I don't think that we're being particularly aggressive in forecasting that there will be meaningful growth over both residential and commercial solar for the next few years. Meanwhile, the cost to install will continue to fall. It's a trend that has been happening year over year for decades now, and will continue in both the residential market and in the commercial market for the next few years. One of the things that's interesting about this is that system prices falling over the next few years are not going to be due to the same factor that we've seen historically. It's been module prices more than anything else. Module prices, as most of you probably know, flatlined, even increased a little bit in 2013. We expect them to increase further in 2014 and then begin a slower, more gradual reduction thereafter. So to the extent that system prices are falling, it's not because of the module. It's because of other hardware, everything from inverters to mounting structures, and it's because of soft costs, which will be a topic of conversation, I'm sure, in today as well as the rest of the conference. So Despite the fact that system prices will be falling, and so just less money needs to flow into any given project, there is going to be a need for a lot more capital to flow into the distributed solar market in the U.S. in the next few years. In 2010 through 2013 total, in that 4-year period, about $9.9 billion went into residential solar installations. This is across all types of project finance, so some of this was tax equity, direct equity, debt. But it was about $10 billion over a 4-year period, about $15 billion in the commercial market. So we had about a $25 billion total market size over a 4-year period in terms of dollars that had to get spent on distributed solar installations in the U.S. The next 4 years, you'll need a lot more money. You'll need $21 billion or so in the residential market, another $19 billion in the commercial market, for a total of about $40 billion. So from 25 to 40 just over the next 4-year period, and that's despite falling system prices. So obviously, and this is probably no surprise to anyone in the room, there is a need for a lot more capital to flow into these projects, and more importantly than just needing more capital, we need that capital at a lower cost. We need new vehicles through which to deploy capital, receive capital, and finance solar projects. So that's what today is all about. Now, briefly, a word on the agenda for the afternoon, and then I will get out of the way. Here's what we're going to be doing. We structured the agenda for this afternoon into 3 individual sessions. The first session, which we're calling Traditional Vehicles, and we're fortunate to have the speakers up on the podium already, is talking about the things that you generally think of when we talk about project finance for distributed solar in the U.S. now. First, unleashing the supply of tax equity for the next few years, and potentially for a while thereafter. We are still going to be reliant on tax equity markets. It would be folly to not talk about that in detail already. Then we move on to debt. We talk about driving down interest rates, what the state of debt finance is for distributed solar in the U.S. This is going to become potentially even more important moving forward. And then project M&A, of which there's been an increasing volume over the past few years. And what can we make from that? And what can we figure out about where the market is heading based on acquisitions of projects and project pipelines? So we talk about traditional vehicles. Then we head immediately into what we're calling New Horizons, which is just a number of, and certainly there are a dozen others that we could have selected, but we select 3 individual new types of financing for solar that we want to bring up and talk about the costs and benefits of, as well as the state of affairs. So we start with solar storage financing. This is emerging, this is new, there aren't that many companies doing it yet, financing a solar plus storage solution at one time. So we have one of the early leaders in that space talking about what lessons they've learned, as well as what challenges there are, particularly in financing solar with storage. Then we talk about 2 of the hotter topics in distributed solar in the U.S. Yieldcos, of which there are very few. In fact, really one solar-ish yieldco out there from NRG to date, but already a couple of other companies that have yieldcos coming. And then securitizing distributed solar, possibly the hottest topic right now, especially with Solar City now having closed 2 securitizations. So we have fantastic speakers for all of those. We then take a 30-minute break, and we come back for a really exciting session, which is going to be led by today's sponsor, the True Solar Initiative. If you don't already know what the True Solar Initiative is, that's a shame, and you should, but fortunately you're in the right place, and you'll get to hear from a number of leaders who are members of the True Solar Initiative about, particularly in the commercial solar market, what we can do to better assess project risk and thus unlock more capital at a lower cost. And so we'll have a number of shorter sessions that go in succession as part of that, led by members of the True Solar Initiative. That'll take us right up until 5:15, at which point everybody adjourns, heads straight outside to the Litchfield lawn for today's reception, which you are all invited to and are welcome to attend. So with that, thank you very much. I look forward to this afternoon, and I'm going to hand it over to MJ Shayle, who's GTM Research's Director of Solar Research, to get us started on session 1.